Okay, let's unpack this. Today, we're plunging into a financial tool that seems, well, incredibly straightforward on the surface. The money order. Many of you probably use one maybe to pay rent, send money home, or handle a bill.
Sure, they're pretty common.
But as the source material for this deep dive reveals, particularly from FinCrime Intelligence, which, focuses on tackling financial crime, there's a hidden layer of complexity and risk. We need to explore that.
Absolutely. Our mission today, really guided by this FinCrime intelligence source, is to go beyond just the simple definition.
Right.
We'll understand what money orders are, why they're genuinely useful, even essential for a lot of people, but also, and this is critical, uncover the significant financial crime vulnerabilities they present.
And how the system tries to stop that abuse.
Exactly. And how the financial system works to mitigate those risks. It's sort of a classic example, really. A simple tool caught in the complex world of financial integrity.
So let's start with the source does. What exactly is a money order, at its
Yeah.
core?
Well, the source defines it as a prepaid financial instrument. Simple as that. You use it to make a payment or transfer funds.
Okay.
Think of it like a guaranteed payment method. It's basically an instruction to an issuer, whoever sold it, to pay a specific amount to a named recipient.
Right. Prepaid is the key word there, I think. You pay up front.
Definitely.
And the FinCrime intelligence source highlights that they're issued by, well, all sorts of places, not just your traditional banks.
Exactly right. You'll find them in banks, sure, but also post offices, lots of retail chains, and licensed money services businesses, or MSBs they call them.
That wide availability seems like part of their usefulness.
It is. It's part of their utility, but as we'll see, also kind of part of the risk profile.
Oh.
And the source immediately flags that even though they seem simple, transactions involving money orders, especially, larger ones or lots of them, are subject to standard anti-money laundering regs, AML regulations.
Okay, so you pay up front. You get this piece of paper, basically.
Mhm.
How does the mechanism actually work? What makes it fundamentally different from, say, just writing a personal check?
The crucial distinction, and the source really emphasizes this, is that a money order is not linked to a personal bank account.
Okay.
Not linked. Yeah. You purchase it with guaranteed funds, cash, a debit card, sometimes certified checks. The institution that issues it holds the money. They guarantee the payment to the recipient.
Ah, that's the accessibility piece then, isn't it? You don't actually need a bank account to even get one.
Precisely. And that's why they are so vital for individuals who are, unbanked or maybe just prefer not to use digital payment methods for whatever reason.
Right.
You pay the full face value plus a small fee, you fill in who it's going to, and bang, you have a secure way to send funds.
And for the person receiving it, the big benefit is knowing the money is actually there.
Yeah.
Right. They can cash it or deposit it without worrying it'll bounce like a personal check might.
Correct. The funds are guaranteed by the issuing institution once it's been bought.
Yeah.
That reliability, that's a major advantage over a personal check.
That prepaid, guaranteed nature.
Yeah?
It makes perfect sense for legitimate use. So before we get into the darker side, the risks, what are the main reasons people rely on money orders day to day, according to the source?
Well, the FinCrime intelligence source lists several key use cases. Paying bills is a big one.
Like rent.
Utilities? Exactly. Rent, utilities, that sort of thing. Sending money to family members or maybe others who might not have easy access to a bank account. That's another critical function.
Or even something as simple as needing a secure way to send a payment through the mail.
Mm.
You wouldn't want to send cash.
Right. Or maybe needing to replace a personal check that got lost or stolen. Those are common scenarios the source mentions.
Okay.
And sometimes, for certain transactions, maybe with smaller businesses, people just prefer a non-electronic method. Or they want the perceived privacy a money order offers compared to a personal check that's obviously linked right to their account.
Okay, so that accessibility, that reliability, clearly valuable. But the FinCrime intelligence source is pretty clear that these very features, well, they create significant vulnerabilities.
They do.
What are the characteristics that criminals tend to exploit?
The source really zeroes in on three key aspects: anonymity, portability, and the difficulty of tracing the funds once that money order is cashed or redeemed somewhere down the line.
Anonymity. But don't you have to show ID sometimes?
Well, yes, for larger amounts maybe, but it's not directly linked to a specific bank account for the purchaser in the same way a check is, and they can change hands easily before they're finally cashed. That lack of a clear, continuous trail makes them attractive for illicit purposes.
Okay, so anonymity, portability, hard to trace.
Mhm.
How does that translate into actual criminal activity? What specific schemes does the source identify?
Money laundering is a major concern. Criminals with, dirty cash can convert it into money orders pretty easily. Well, the source points to tactics like structuring purchases. That means buying multiple money orders, often in amounts just below the regulatory reporting thresholds, specifically to avoid triggering detection.
Structuring. Yeah, I've heard that term before in AML context. It's like deliberately breaking down large sums into smaller chunks.
Exactly. And the source actually introduces a more vivid term for this specific type of structuring with money orders: smurfing.
Smurfing, like the little blue guys.
Sort of, yeah. It's when individuals, often working for a criminal organization, make multiple purchases of these small value money orders, maybe over time or across different stores or post
Yeah,
offices.
carting it out.
Right. All to convert that bulk cash into something more portable and, crucially, less traceable, bypassing those reporting requirements we mentioned.
Smurfing. Okay, that's a memorable way to describe it. What about fraud? Is that common too?
Oh, yeah, fraud schemes are rampant. The source details scams using counterfeit or maybe altered money orders.
Fake ones.
Fake ones, yeah. A really common one involves sending a victim a fraudulent money order, often for more than an agreed amount. Then they ask the victim to quickly send back the overpayment using something irreversible, like wire transfer.
Before the original money order bounces.
Precisely. Before the bank figures out the money order is fake, so the victim loses their own money wiring it back.
Nasty. Okay.
And terrorist financing is another risk cited. Money orders can be used to move funds discreetly across borders, maybe to individuals or groups in places where traditional banking channels are heavily watched or restricted.
And mail fraud. That connects back to the fact that it's a physical thing, right?
Yes, exactly. Fraudulent money orders are frequently used in things like phishing scams or those fake lottery winnings letters or overpayment schemes sent right through the mail.
So you get a money order in the post.
Yeah, you get a money order, looks real, you're told you won something amazing, but oh, you just have to pay some fees or taxes up front to claim your prize. And they want you to pay using, again, some untraceable method. The money order they sent you is worthless.
Wow, okay. Given all these pretty significant risks, it's clear why the FinCrime intelligence source puts so much emphasis on the regulatory side of things. How does the system try to, prevent this kind of exploitation?
Well, the source explains that money orders are actually designated as covered financial instruments. They fall under national AML frameworks like the Bank Secrecy Act, the BSA here in the U.S.
So FinCEN oversees this.
Yeah, oversight from agencies like FinCEN is key.
So they're basically treated like banks and other financial institutions when it comes to fighting illicit finance.
In many ways, yes. They fall under that same umbrella, and there are specific compliance measures required from any institution that issues or even just cashes money orders.
Like what? What do they have to do?
Well, several key things. Customer identification and verification is mandatory, especially for transactions over certain dollar amounts or if someone's trying to buy a whole bunch at once, bulk purchases.
Right.
The institution needs to know, or at least try to know, who is buying or cashing significant amounts.
Makes sense. You can't just, show up with a suitcase of cash and buy a huge stack of money orders totally anonymously if it's above a certain limit.
Well, you shouldn't be able to, no. Record keeping is also vital. They have to maintain details like the serial number, the amount, purchaser info if collected. This data is crucial if law enforcement needs to trace a transaction later.
And presumably, institutions need to be actively looking for suspicious stuff, not just reacting.
Absolutely. They have to implement transaction monitoring systems. These are designed to detect patterns that might indicate money laundering or fraud or that smurfing tactic we talked about.
Good.
And when they spot something suspicious, maybe a pattern that doesn't make sense, they are required to file a suspicious activity report or a SAR.
So the monitoring flags potential issues, and the SAR is the formal heads up to the authorities.
That's the basic process, yeah. The source also points out that institutions often implement internal limits on daily purchases. This is a direct countermeasure to smurfing, right? Makes it harder to structure those transactions just below the official reporting thresholds.
And what about those other places that issue them, like the retail stores or those MSBs you mentioned? Are they covered too?
Yes. MSBs, money services businesses that handle money orders, are subject to registration requirements and regulatory examination, just to ensure they're also complying with these BSA and AML obligations.
Okay, so that's the regulation side. Beyond the rules themselves, what are the practical best practices the FinCrime intelligence source recommends for institutions? like the people on the ground?
Yeah, good question. A really critical practice is training frontline staff.
The tellers, the cashiers.
Exactly. The people actually selling and cashing the money orders, they are the first line of defense, really. They need to know what red flags look like.
Such as,
Things like unusual purchase patterns, someone buying lots frequently, or always just under the limit, customers trying to avoid providing ID, maybe using different names, or just seeming overly nervous or secretive about the transaction.
so it's not just about the computer systems, it's about human awareness too.
Very much so. They also recommend leveraging technology, of course, using systems to analyze transaction data for anomalies or structured patterns that a human might miss in the volume.
Makes sense.
Periodic audits of money order sales and redemptions are also advised, just internally checking things.
And what if you have customers or like agents who deal in really large volumes of money orders?
For those, the source suggests applying enhanced due diligence, or EDD, basically giving individuals or entities involved in high-volume money order activity a closer look.
More scrutiny.
Yeah, if someone is moving a lot of money through money orders consistently, they warrant closer scrutiny than someone who just buys one occasionally to pay their rent. And finally, collaborating with law enforcement is essential. When institutions identify trends that might point to organized criminal networks abusing the system.
It really sounds like you need a multi-layered approach. Technology, rules, people.
It absolutely has to be. And the source really emphasizes that institutions need to take what they call a risk-based approach, meaning they tailor their controls based on the specific risks they face. Depending on their location, their customer base, the volume they handle. It's about balancing security with maintaining legitimate access for ordinary people.
Okay. So wrapping this deep dive up then, it really seems the money order is a perfect illustration of a tool with this kind of fascinating dual nature.
It really is, isn't it?
Yeah.
On one hand, it's an incredibly useful, sometimes even essential financial instrument for many people, especially, as we said, those relying on cash or maybe lacking traditional banking access.
But then its core features, that accessibility, the prepaid nature, the portability, the relative anonymity, those also make it highly vulnerable. Vulnerable to exploitation by sophisticated financial criminals for things like money laundering, fraud, even terrorist financing.
And that inherent tension, that duality, it means that managing money order activity requires constant vigilance. It needs strong regulatory frameworks, yes, but also robust institutional controls, and really importantly, informed staff, all working together to protect the financial system from misuse. Our FinCrime intelligence source makes that abundantly clear.
Yeah.
Understanding this gives you, the listener, a clearer picture, I think, of the ongoing battle, the constant effort needed to maintain the integrity of even the seemingly simplest parts of our financial system.
It really highlights just how much complexity can be hiding there in plain sight in something so common. And based on everything we've learned from the source material today, here's maybe a thought to leave you with. How do we continue to provide easy, accessible, and affordable financial tools like money orders for the millions who rely on them daily for perfectly legitimate reasons,
Yeah, that's the challenge.
while simultaneously building controls sophisticated enough to stop the, relatively small number of criminals who seek to exploit those exact same features? It's a tough balance.
It really is. It's a challenge that sits right at the heart of financial innovation and regulation today.